Hello, I'm Mario Toneguzzi, taking care of business. Joining me today is Tanya Eklund, who is a realtor with the Tanya Eklund Group and with Remax Real Estate Central. Thanks for joining us today, Tanya.
Hi, Mario.
We're going to talk about the May MLS numbers for Calgary and the resale housing market. Sales were up 3% year over year, 3,071. Now, of course, it's down a little bit from the frenzy of activity in the previous couple of months, but still extremely high historically. So tell me what's happening in terms of demand and why we're seeing demand still there.
Yeah, well, I think in March, Mario, there was this FOMO, this fear of missing out. And we had a lot of inventory. We had this early spring. And so a lot of these buyers bought up. But now what we're seeing is sales have actually dropped in April because we peaked in March, but partially it's because we don't have as much inventory as we had listed. But homes are still moving quickly. I just had a buyer this morning send me another property they wanted to see, and it sold unconditionally, and it's in the 900 range. It's a detached home, and the same thing happened to them 2 days ago, and both unconditional offers. So I said, guys, we have to make sure that your bank gives us permission to write unconditional. These detached homes, I would say even under 1.5 million are still moving very, very quickly because there is low supply and high demand.
Okay, and let's talk a little bit, first of all, about that supply. The new listings were down in May, 5.9% year over year. Inventory is down 23.4% from a year ago. Months of supply, 1.69, so down 25.7%. Why do we still have that low inventory? Is it just because of all the sales that have been made previously?
I think a part of it is people are fearful of listing their homes, that they're going to sell very quickly and they're going to have nowhere to go. I'm meeting with many families who are fearful of that. They say, Tanya, we have kids, we have busy lives. That's great that our home average days on market for a detached home is 18 days. And that's great. You think you can sell it in 2 days, but where the heck are we going to go? We can't be homeless. So I'm meeting with a lot of sellers that I'd probably have 20 to 25 more listings right now, literally, if I could find them something. And so that's the reason I believe some of our inventory levels are very low.
Okay, let's talk prices. The benchmark price for overall was $546,000 in May, up 14.5% from a year ago. Typical story of supply demand raising prices. Is that what's going on?
100%. We're still seeing bidding wars. We're still seeing because of the low inventory, and that is still pushing up prices, not as much as we saw in February, March. I definitely see a slowdown, even after all I've just said. A part of that is there is just less inventory to show. I have even seen a few price reductions. I think, too, a lot of sellers, builders, they heard how hot the market is, and so they really want to try on the high end. But I think some buyers are saying, you know what? Yeah, we like the house and we're willing to pay a little bit more, but we're not willing to pay 15% more. And so we are starting to see some price reductions in some areas as well.
Okay, can you talk a little bit about the detached market and why that's so popular? And the overall prices have gone up even more than the overall price for a house has gone up mostly in the single detached. So why is there such a demand for that product?
I believe that the way that we have lived and worked for, many, many, many years has really evolved. And so people are now at home more. They're spending more time. They need a home office. They're eating, they're living, they're laughing, they're loving, all of these things. And so they want a different space than what they had prior to COVID. And that hasn't changed. A lot of people are adapting to the hybrid model where they're 3 days at home or 2 in the office. I met with a gentleman yesterday who goes 1 day into the office and they want a larger home. They want 2 dens in their house. And so they are taking, this time to find a larger home with 2 dens. So I believe that is one of the main reasons we're seeing all of these people kind of trade from smaller homes or townhouses or condos into detached homes.
Okay, so we're approaching the sort of midpoint of the year, and in early June here, we're talking sales are up 30% from a year ago, and bear in mind, last year was a record year for Calgary, the most sales ever in the market. What do you expect to see for the last 6 months, last half of the year?
I do believe that it's going to remain a seller's market until the end of the year, even with interest rates. And I think that's going to be driven by low inventory and reasonably high demand still. So year over year, we always see the summer months slow down. We see sales drop. I believe that's going to be typical just because we don't have the inventory. Now more than ever, people's ability to travel is back. So people are wanting to get on planes. People are wanting to travel. So I do think that the summer, year over year, this year's not going to be any different. I do estimate that we're going to have a strong fall, even with interest rates. And again, that comes down to demand, supply and demand. I could see it tapering off kind of at the end of the year and into next year, especially if we're still seeing these rate increases. I've heard some you know, whispering that we could see even up to 7% next year. If that were to happen, I do think those kind of rate increases would temper our market a bit, but I'm still very bullish for Alberta. We have a lot of great things happening. We have a lot of net migration occurring. And so if the market does even out a little bit, Mario, I think all of us can sit back and say, wow, what a ride that we have been on for the last 12 to 18 months.
Exactly. Okay, thanks, Tanya, for joining us today.
Thank you, Mario.
All right, that was Tanya Eklund, a realtor with the Tanya Eklund Group and with Remax Real Estate Central in Calgary. I'm Mario Toneguzzi, taking care of business. Thanks for joining us today.